Hello and welcome. You are watching Global Eye and I'm Parikshit Luthra. US President Donald Trump has put a 90-day pause on the sweeping tariffs announced on trading partners last week. The baseline tariff of 10% continues to be in place, but the rest has been suspended till July. However, Trump refused to exempt China and instead hiked the tariffs, instigating an all-out trade war between the two countries. After a lot of back and forth, the Chinese Commerce Ministry said it will not react to any further tariff increases by the US. It said, and I quote, "It will no longer make economic sense and will become a joke in the history of the world economy." End of quote. China's President Xi Jinping held bilateral talks with Spain's Prime Minister Pedro Sanchez and said there are no winners in a trade war. And China is not afraid. This was his first reaction to the US tariffs. Meanwhile, US President Donald Trump called Xi Jinping a good friend and a smart guy as he expressed optimism about striking a trade deal with China. Many countries have reached out to the US to strike new trade deals, and India is one of them. Government sources have told CNBC TV 18 that US Vice President J.D. Vance may soon visit India for trade talks, and Indian officials could visit the US. Sources also say it will be difficult to have a bilateral trade agreement in 90 days, but the form and shape of such a deal could be decided as well. All right, let me go across to Todd Buchholz, who is a former White House official, in fact, the director of economic policy at the White House. Todd, thank you so much for joining us. You've had tremendous experience in working with the White House on economic policy, a regular commentator on US markets as well. Give us a sense that Trump may have paused the tariffs, the reciprocal tariffs, but the 25% tariff on steel, aluminium, autos still remain. The 10% baseline tariff is still in effect. The China tariff has been hiked to 145%. Enough grounds for a recession?
Well, we're certainly putting the world economy in a squeeze, in a vice, and the screws are turning and the risks are rising. And one way to see that is through the performance of the bond market. Usually when the prospects of a recession become greater, when it looks like the economy is weakening, interest rates go down. But this week, and this is what really, I think, had shaken the White House and shaken the Oval Office, interest rates started crawling up, which meant world investors were getting very concerned about the stability of the global system and the stability of the US Treasury market. And so we are now at the point where the word stagflation is rising. That is recession plus inflation simultaneously. So that's the risk. That's what President Trump needs to avoid. I believe that's why he imposed on himself this 90-day hiatus to allow for further negotiations.
Right. That indeed is an important point. So you said that there is, of course, a risk of recession. There is a risk of heightened inflation as well. Could you give us a sense of the factors that are going to weigh in and weigh on the US markets in the months to come? We've seen a strong impact on Asian markets, European markets, but when it comes to US markets itself, they have been rattled. Many have said there's going to be a further downside. What are some of the pain points that you expect when it comes to job, when it comes to cost of living?
Well, look at it this way. We all, well, I shouldn't say we all, thank God most of us survived COVID, right? Many millions died. During COVID, there were massive supply chain problems where companies could simply not get parts. If you were building a refrigerator, you might be able to build the shell of the refrigerator, but you might not be able to find a little tube that connects the ice tray to the ice dispenser. So you had refrigerator companies that had items that were 98% done, but they couldn't deliver them because they weren't 100% done. So even though trade may be a smaller part of the U.S. economy, exports are a much smaller part of the U.S. economy than other economies, including India. So for instance, India exports about 22%, I believe, of GDP is from exports. In the U.S., it's about half that. But still, if the last piece of equipment cannot be accessed, you don't have a refrigerator. Same thing with automobiles. The U.S. automobile companies, even if 98% of the automobile parts were made in the US, if the last 2% includes the radio and somehow that was imported from China or Japan, that becomes a big problem. So we've got product markets that are going to freeze up because of lack of parts. And if they freeze up, that means that the shop foreman tells the workers, well, you better go home. There's no point in building 98% of a car if we can't sell it. That leads to layoffs. And if tariffs are increased, that means there are higher prices on the imports. So all of that is a kind of constellation of chaos that has now been unleashed.
Right. I would also like to ask you about the worries and what certain senators have called for a probe for into insider trading. They went on to say that Donald Trump, by first saying that this is the best time to buy, and a couple of hours later he announces a pause on tariffs. This was nothing short of insider trading. What do you feel about that? Trump's current decision only driven by politics, or could there be a larger economic interest, or are there certain companies or people, individuals getting benefited?
Well, no, honestly, I think it's a silly argument that somehow Trump was manipulating the market in order to make money for himself. No president wants the market to go down. Anytime a president talks about the stock market, he's going to say it looks like a buying opportunity. That's been going on since Franklin Roosevelt in the 1930s. I believe that Donald Trump sat in the Oval Office watching television, listening to advisors, and he suddenly decided 90 days, and I'm going to announce it now. I don't think it was a matter of he whispered to various people, hey, buy now. I'm going to make some announcement. Nobody knows about it, but you can make money. No, that's not how it works. President Trump is in some ways a mercurial character. He's in some ways you could call him a devious character in his pursuit of what he calls the art of the deal. But I don't think it's a matter of trying to enrich certain people by giving them inside information.
Right. We just heard Larry Fink a short while back on CNBC, and he said that it's painful to say, but the US has become the biggest trade destabilizer. And he also said that there is going to be a worry about, embedded inflation in the months to come. Would you agree with him to some extent?
Well, look, ultimately, inflation comes down to what the Federal Reserve does. It comes down to monetary policy. So if Jay Powell, my old buddy from the Treasury Department, if he doesn't provide any more money, then while it is true that the price of imports may go up, there won't be enough money to pay for those and keep other prices where they are. So in other words, the price of imports may go up, but other prices will be forced down. That might mean, for instance, people don't go to restaurants. People conserve or economize on non-imported products. So I think the initial impact of higher tariffs is, yes, prices will be going up. But then what you're going to see is downward pressure on other parts of the economy because there simply won't be enough money in the overall system to pay higher prices for all the imports and pay higher prices for domestic products.
Right. I would also like to ask you about the long-term impact of what Donald Trump has done. Do you feel that a course correction, as some believe that Trump has initiated by putting a pause on the reciprocal tariffs, do you think there will be a further course correction? These reciprocal tariffs will be completely set aside, or you think what has happened right now is going to have a long-term impact and impact the U.S. economy over the next 4 to 5 years?
I think President Trump wants to settle down on the chaos, especially, as I said, in the bond market. Here's what your viewers need to remember about Donald Trump. He began as a developer. Actually, he spent 65 years as a real estate developer. My grandfather was actually a friend and colleague of Trump's father as a real estate developer. What do real estate developers want? Low interest rates, low financing rates. which is why this week, when he saw the chaos leading to a sell-off in U.S. Treasuries, leading to a climb in interest rates, that's when he backed off. So I think he is now bracing himself and trying to figure out how to declare victory on trade without pursuing a global trade war. So maybe increasingly we are focused more and more on China, but I think for countries such as India, where the president has a very warm relationship with Mr. Modi, I think there is going to be better news coming on the trade front. And I'd say the same thing for Japan and many other U.S. trade allies, partners, and competitors. You know, I'd written a piece recently that said nations that march together should trade together. That is, if we, the U.S., have joint naval maneuvers with a country and joint Marine and Army and Air Force maneuvers, we should feel comfortable about trading with them. And I think in this very dangerous world economy, I think that's where the U.S. ultimately will come out, which will give assurance to investors that may take more than a couple days and certainly won't be achieved on a Friday afternoon.
Right. When it comes to relations with China, do you expect the U.S. to try and work out some sort of deal with China? Do you think that kind of a trade agreement would be possible on the kind of terms that Donald Trump may want?
I think a trade agreement is very difficult with China right now. You remember in the first Trump administration, President Trump had done a deal with Mr. Xi for the Chinese to buy various agricultural goods and some manufactured goods. It's unclear whether those investments or those purchases were actually made. And also, I don't think we should be levying all of the blame for what's going on at the White House without recognizing that Mr. Xi in China has declared a, quote, smokeless war, smokeless economic war with the U.S. China has declared its ambition to take over the world economy, to be aggressive and achieve hegemony in Asia. And I think that makes it very dangerous geopolitically as well as economically. So I don't think this trade war with China is going to end very soon, but perhaps the tariffs won't stay up at the lofty 150% level that we see today.
Right. And by when do you expect, as somebody who has worked with the Bush administration, who has worked at the White House closely, when do you expect the dust to really settle? Because I'm sure market observers in India, in the US, and around the world would like to see some certainty returning to the trade patterns.
Well, you might have noticed a change in the spokespeople for the White House. Peter Navarro, who had written a book called Death by China and is anti-free trade, was all over the television last week. This week, he has retreated. He's no longer in front of the cameras, or at least not to the same extent. Instead, the Treasury Secretary, Scott Bessent, is in front. Scott Bessent is very experienced with Wall Street and the hedge fund community, and very sensitive to price movements and price fluctuations. That means there is now a sense of urgency to calm down the markets and achieve some victories on the trade front, which is why you see Bessent on the phone consulting with the Vietnamese, who immediately want a deal because 87% of their economy depends on exports, with the Japanese, Israelis, and various others with whom the U.S. has a warm relationship.
Right. All right, Todd, thank you so much for joining us with that very important view on where we're headed in terms of the market mood, the sentiment around tariffs, and the course correction also that is taking place simultaneously. We're now going to be taking a short break here on Global Eye, but don't go anywhere. We'll be getting a very important interview with Lisa Curtis, who's also been a senior official at the White House, a former CIA official, a State Department official, and she feels that clearly Trump's trade strategy has backfired, and that's why there is a pause. That interview coming up.